So this is money market still. Question 4A, Kadizenga Limited. Kadizenga Limited. So you're told here Kadizenga Limited is a Kenyan company with a substantial proportion of its trade with companies in the US. Kadizenga Limited invoiced a US firm 60,000 United States dollars, receivable 3 months from now. Receivable 3 months from now. Additional information, the borrowing rate is 3% above the bank base rate, while the investing rate is 2% below the bank base rate. These rates apply both in Kenya and the United States. Number two, the bank base rates in Kenya and the US are 15% and 10% per annum, respectively. Number three, the exchange rate in the forex market between the Kenya shilling and the US dollar are as follows. So they've given us the spot exchange rate there. We have 1 month forward rate. We have 3 months forward rate. So required, they want us to calculate the amount to be received by Kadizenga Limited using number one, forward contract. Number two, money market hedge. All right. And then they would want us to offer some advisory there. They would want us to offer some advisory. They would want us to offer some advisory. So it's money markets and what here? Forward contract. Money market and forward contract. So of course, as usual, if I'm given the two, even if the examiner did not give me numbers there, I would want to start with the easier. The easier one there is the forward what here? The forward contract. And of course, you and I know that this is quite an easy thing. They simply want us to do two things, to provide two things. And a forward contract, they would want us to give them the amount involved. So amount involved, like in this particular case, ladies and gentlemen, the amount involved here, we are told it is 60,000. It is 60,000 US dollar. It is 60,000 US dollar. 60,000 US dollar. But now you have to tell me, ladies and gentlemen, this 60,000 US dollar, is it a receivable or a payable? Is it a receivable or a payable? A receivable or a payable? It's a receivable, yes. You can see there, we invoiced 60,000 US dollars receivable in 3 months from now. So this is 60,000 receivable. Receivable. How many months? 3 months from now. So meaning that the next thing that I would need, ladies and gentlemen, the second item that I would need here is the 3 months, not 1 month, is the 3 months forward rate. The 3 months forward rate, because you see 1 month from today, ladies and gentlemen, I will not be having this money. I'm going to receive this money in how many months from today? 3 months. So then I should be able to give them the 3 months forward contract rate, forward contract rate. As the examiner given us that 3 months there, yes, I can see has given me 3 things. Spot exchange rate is today's prevailing rate. So I'll not pick that one for forward contract. There are students in this semester who picked 1 month forward rate, which was quite unfortunate. It's supposed to be 3 months forward rate, which is 101, 3 months forward rate, which is 101 to 102. And then up there, you'll be able to see. Up there, you'll be able to see it is Kenya shillings per who? It is Kenya shillings per US dollar. It is Kenya shillings per US dollar. Ladies and gentlemen, please listen and listen to me very well. Here straight away, when I'm given this kind of a range, lower limit and upper limit, I must define the buying rate. I must define the buying rate. So we've been told that Kadizenga must be a company at the cost. A company at the cost. Kadizenga is based in which country? Kadizenga is based in which country? Can someone talk to me this morning? We've been told Kadizenga is based in which country? Kadizenga is based in Kenya. So straight away, ladies and gentlemen, you are talking about who? You are talking about Kenya shillings. You are talking about Kenya shilling being your local currency. And if your local currency is the Kenya shilling, where is the Kenya shilling? It is on the left-hand side. It is on the left-hand side. it is the first currency here. And if it is the first currency here, then the first figure given here becomes what here? Becomes buying. So remember the concept of shaking your hand towards your home currency, towards your home currency. So if Kenya shilling is on this side, then the first figure, this figure which is on this side, becomes buying rate. And then this other one here becomes what here? This other one becomes the selling rate. The other one becomes the selling rate. Ladies and gentlemen, listen and listen to me very well. Listen and listen to me very well. There is something that you guys never told me. There is something that you guys never told me. This receivable, what will be the role of the bank? Role of the bank. What will be the role of the bank for the receivable? The role of the bank. So if it's a receivable for R, I remember this is the concept of foreign boyfriend buys dinner. Receivable. This is that concept of foreign boyfriend. Even if it's not a money market thing, now we can connect here. Foreign boyfriend buys dinner. Buys dinner. Foreign boyfriend buys who? Buys dinner. So this concept of receipt always buys. So the bank will buy, the bank buys, the bank buys, bank buys. Buys at what rate? The bank buys at what rate? Are we able to see the buying rate? Are you able to see the buying rate? Are we able to see the buying rate here? Are we able to see the buying rate? So the bank buys at what here? At 101. The bank buys at 101 Kenya shillings per US dollar. Kenya shillings per US who? Per US dollar. So hii question ambayo wanafunzi walipotea sana, wengi walianza kuchukua pa 1 month forward rate. Wengi pia wakashindwa kudefine buying and what ya selling. Na wengi of course watasahau ile concept ambayo nimerudia mara mingi. Ukisikia swali ni receivable, unajua straight away receivable, the bank will buy. So then now you go to the last thing. The last thing here will be about you now exchanging, doing the very obvious. The next thing will be for you to do the very obvious. The next thing will be for you to do the very obvious. So please go ahead and do what here. Go ahead and buy. Please go ahead and do what here. Go not and buy, but go ahead and do what here. Go ahead and exchange. Go ahead and exchange. So when I'm exchanging, I know the rate. I know it is 101 Kenya shillings per US dollar. It means 101 Kenya shillings equals 1 US dollar. Equals 1 US dollar. Then how about 60,000? How about 60,000 US dollars? How about 60,000 US dollars? So if you cross multiply here, it will be 101 Kenya shillings times 60,000 US dollars all over 1 US dollar. So this and this will cancel out, giving me the many Kenya shillings there, 60,000. So in this case, at the end of the day, it will be Kenya shillings 60,000. Now, could I make myself clear by repeating here a little bit? Could I make myself clear here by repeating a little bit? Now, ladies and gentlemen, listen here, listen here, listen here. Ukiangalia ile table huko juu kabisa, wamekuambia Kenya shillings per 1 US dollar. Kenya shilling per 1 US dollar. Hapo pia ilikuwa na confuse wanafunzi. Pale ukiona imeandikwa namna hiyo, unafaa kujua that expression, it's Kenya shillings per what year? Per US dollar. Kenya shillings per US dollar. All right. Now, I would want you guys to open up to my great question here. If this came to your exam today, if you're doing an exam today, and then you got this kind of a question in exam, how many of us would get it correct? Forward contract. Forward contract, you can simply, yeah, me, I can see me, right? Forward contract. Great. And then, ladies and gentlemen, if you allow me, I'll go straight away then to money markets. Money markets, oh, this is the easiest. Yaani, kama ningekuwa Mluya, hii ni kama ile mboga inaitwa mrenda. Hii ndio the easiest. Money market ndio the easiest. Ladies and gentlemen, we look at money market hedging strategy. So money market hedging strategy, this is not even something that, I mean, this is something I should do with my eyes closed. With my eyes closed. This is nothing. Money market, it's nothing. Money market is nothing. Money market is nothing. Money market is nothing. Money market is nothing. Babake, I think he must be having a problem with his internet. He can't see the board and he can't see Mwalimu here. So, but you can hear me. So the best thing you need to do is to get off the meeting and then you come back again because it is a problem with your internet or something. Now, ladies and gentlemen, we are told the money market hedge there. So for money market hedge, what am I supposed to do? Very easy, very easy. For money market hedge, this is what I shall do. For money market hedge, this is what I shall do. So for money market hedge, this is what I shall do. Number one, at the foremost, give me the amount. It is 60,000 receivable. The amount is 60,000 receivable. And ladies and gentlemen, if that is the case, then go ahead and tell me one thing. Which rule? Remember, the market has got two rules. Which rule are we going to make use of here? Which rule? There are two rules. When the market has got two rules. When the market has got two rules, yes. So I'm going to make use of use the foreign boyfriend buys dinner rule. Because it is a receivable. It's not a payable. If it was a payable, then I would have known what to do. So ladies and gentlemen, listen and listen to me very well. Because, ladies and gentlemen, listen and listen to me very well. Because this is a receivable, then I'm going to use this concept of foreign boyfriend buys dinner. Of course, this tells me from the word go that the bank will buy. It's important for us to specify this, that the bank will buy. Oh, I wish I were you. I would have written this thing very fast and ensured straight away that a yellow highlighter is on top of it. This one, a bank buys, yellow highlighter. Of course, not in an exam, for our revision here. Because of this buy, you know, it's not about dinner. Really, dinner is for us. Dinner is for you and me here, right? But we know buy, the examiner would want to know bank does what here? Bank buys. So this is so important to me. Ladies and gentlemen, after I've done this so nicely, I know that the next thing, ladies and gentlemen, will be for me to come and straight away do what here will be for me to come and straight away give them, draw a table for them. Please always ensure that you draw a table. Ensure that you draw a simple table. Ensure you draw a simple table. Iko wanafunzi unapata anachora sababu amefurahia meza sana, maybe this is the only question ambayo anajua, anaanza kuweka paka kitambaa juu. Ati sasa siku hizi hii kitu ya kuweka kitambaa iliisha fashion. Huwezi pata mtu anaweka meza kitambaa juu. Kama unaweka meza kwa kitambaa yako nyumbani, mimi hata usinivite kwako. Siku hizi nataka simple life, simplicity, just a table there, awkward table. Kitchen should be open. I should be able to see what you are cooking there. If I need to do something myself, I should be able to go and, fix something that it should be open. Mambo haitaki mambo mengi. Kativi kadogo umeweka pale, hapana kata vitambaa mengi. Maisha yanataka simplicity. Simplicity siku hizi. Quite a simple. Ati sofa set pair sita, sijui pair ngapi. Ya kazi gani? Kipo namna hii. Very good. Hiyo mambo ya msansi takuja kuwafunza baadaye. Now remember, the first leg must always be what here? Must always be borrow. The first leg must always be borrow. First leg must always be borrow. The second leg here must always be what here? Somebody must always be invest. The second leg must always be invest. The second leg must always be invest. Great. Now, ladies and gentlemen, listen and listen to me very well. You are the ones who have told me foreign boyfriend. Borrow foreign. This means BF. It's borrow foreign. How I wish you would have written this somewhere, even in full. Foreign receipt, borrow foreign. Foreign receipt, borrow foreign. And remember, I've got two currencies. I have the Kenya shillings vis-a-vis what here US dollar. And this Kadzenga company is a Kenya company. So meaning that if I'm borrowing foreign, if I'm going to borrow foreign currency, then I'm going to borrow the US dollar. I'm going to borrow the US dollar. So in short here, I'm borrowing foreign, and the foreign here is the USD, right? And then on the other foot, because of the two currencies, the other currency automatically comes here. So in this case here, in short, I'm investing what here, somebody? I'm investing local, which is what here, somebody? Which is the Kenya shilling. I'm investing local, which is the Kenya shilling. In between here, ladies and gentlemen, I'm going to convert. There is an exchange rate. I'm going to convert always when the market makes use of what here? The spot rate. Always when the market makes use of the spot rate. Always when the market makes use of the spot rate. So convert at spot. So have we been given the spot rate? Yes. If you look at the table there, they have given us the spot rate. They have given us the spot rate. The spot rate, they have told us it is 103 to 105, 103 to 105 Kenya shillings per what year? Per US dollar. It's 103 to 105 Kenya shillings per US dollar. Kenya shillings per US dollar. So of course, it has been given to us as a range. One of these must be the buying rate. So for me to know which one is the buying rate, I'll straight away look at the expression of my exchange rate between the two currencies. Where is my home currency? It is the Kenya shilling on the left-hand side. The left-hand side. So the left figure here becomes buy. This other figure in this case here becomes what here? Becomes sell. It's not lost on me. The fact that you guys told me our foreign boyfriend buys dinner. Our foreign boyfriend buys dinner. So in this case here, what do we have? This must be the buying rate. Buys. So buys at what rate? You simply write it there. Buys at 103 Kenya shillings per US dollar. Buys at 103 Kenya shillings per what year? Per US dollar. This one here buying rate. So are we together, ladies and gentlemen, up to here? Are we together up to here? Are we together up to here? Are we together up to here? Great. Now, after that, now, ladies and gentlemen, I need my rates of interest now. This is what very many students were not able to do in this semester. This is what very many students were not able to do in this semester. However, I know that you guys are very clever. I know that you guys are very clever. Ladies and gentlemen, please let me not belabor on the fact that always money markets makes use of which conversion rate? The spot rate. Always money market makes use of which rate? The conversion rate. Or rather the spot conversion rate. Spot, not 1 month forward, not 3 months forward. It is always what here, somebody? It is always the spot. The spot rate. It's always the spot rate. Now, from there, ladies and gentlemen, now I would want to fix up my interest rates. Note number one. Note number one, we are told the borrowing rate is 3% above the bank base rate, while the investing rate is 2% below. So meaning that we have the base. We have the base here. So we have the base, and then we are told here, we have Kenya, not two, Kenya and the US. So Kenya and the US. So the bank base rates in Kenya is 15%, and in the US is 10% from note number 2. So then I have, ladies and gentlemen, here I have borrowing, and then I have investing. You can start with any, really. So long as you know that borrowing has got always what here? A bigger value, a bigger interest borrowing rate, always. So I go back to note number 1. Note number 1, they are telling me that the borrowing rate is 3% above the bank base rate, while the investing rate is 2% below the bank base rate. This is a good examiner. He's telling me that regardless of which country, the borrowing rate is 3% above the bank, above the base rate. So meaning that here borrowing, I will take, in this case here, my base rates. I will take my base rates. I add what here? consistently I add 3%. So this one here will be 18%. This one here will be 13%. Borrowing rate is 3% higher compared to the base rate. Higher, so you add. How about investing rate? 2% below the base rate, 2% below. So the base rates that you have here, we have 15%, we have 10%. For the investing, please come and subtract consistently there. Come and subtract who? The 2%. Come and subtract the 2%. Come and subtract the 2%. So then what do we have, ladies and gentlemen? Here we have 13%. Here we have 8%. Hello? In an exam, is there somebody who would have done this correctly? Hello? In an exam, is there somebody who would have done this rates, would have analyzed these rates correctly? Thank you very much. You guys are geniuses. Thank you very much. Most students were not able to do this. Most of them were able to draw the table. And then when it reached here, ladies and gentlemen, they could not now fix the rates. So of course, your guess is as good as mine. These guys here now are left with just decorating the table, because what else do you do in an exam? If you're not able to really, if you're not able really to do what you're to really fix these interest rates, if you're not able to do a money markets question, chances are in this exam, your biggest thing will be to be staring at the ceiling and praying to your God. And of course, God does not listen to somebody who is not hardworking, right? Correct. Borrowing rate is 3% above. Yes. Now, ladies and gentlemen, then could you kindly come and tell me? Remember Kenya, what are we doing? Kenya, not Kenya, but borrow foreign. So in this case here, US dollar, in the US, we are borrowing. So is there somebody who is able to give me the borrowing rate in the US? Is there somebody who is able to give us the borrowing rate in the US? Yes, you can see US borrowing rate is 13%. But remember that this 13% is a whole year thing. 13% is a whole year thing. So meaning, ladies and gentlemen, that at the end of the day, I need to prorate this. This has to be prorated. So do we know the number of months? Do you know the number of months? 3 months. So this one here times 3 over 12, of course, plus the 1. I'm so sure nobody now is asking where this 1 is coming from. Even if you don't know, just cram it. At times cramming, it's also a concept of what here? Learning. It's a concept of learning. So then could you kindly come and give me, ladies and gentlemen, come and give me this figure here. Give me this figure. It's 1.0325. 1.0325. Then straight away, jump to the other leg. So this other leg, now we are investing Kenya shillings. Is there somebody, ladies and gentlemen, who is able to see the investing in Kenya shillings? Somebody who is able to see the investing rate in Kenya. Investing rate in Kenya. Is there anybody who is able to see the investing rate in Kenya? Investing rate in Kenya, this is Kenya. I have the borrowing. I have the investing rate. It's also coincidentally 13%. Coincidentally, this is 13%. Coincidentally, this is what here? 13%. Coincidentally, this is 13%. It has to be prorated plus 1. So which will end up giving me what figure before I answer my own? The same figure, I suppose. The same figure, I suppose. The same figure, I suppose. 1.0325. 1.0325. So Mayom is asking these 3% and 2%. What are they really? They can't be discounts. This is straightforward English, Mayom. Look at note number 1. They've given us the borrowing rate is 3% above the bank base rate. So meaning what? Take the base, add 3% to get borrowing. Base is, borrowing is always higher. This can never confuse me. Borrowing is always higher. So I have to increase that to be more than the base rate, right? So for the borrowing rate, both of them I added 3%. Both of them I added 3%. And then, ladies and gentlemen, from there, we have here investing rate is 2% below my own from note number 1. investing rate is lower. If you go to a bank today, ladies and gentlemen, investing will always be a smaller. Even these guys are so good to give you something that is 13%. I mean, who gives you that for investing? If you put money with them, these guys will give you a peanut, very small, something very small like that. So my home, are we together there? Don't take this to that language of Addis. I can see where you want in this case here to. This is quite different, straightforward, really. Straightforward. If you start in this case, you're taking that one is a premium, the other one is a discount, you are misplacing a concept there totally. That concept of a discount and premium, we normally use them to get like forward rate out of some spot. That's quite different. That's when we are handling money, not when we are handling these percentages. All right. Ladies and gentlemen, from there, what I'll do now as a good boy, I'll come and delete this very nicely. So once I've reached there, now I'll bring the money in the question and hide it. You hide it. The money in the question and then you hide it. So money in the question, how much do we have? Money in the question, how much do we have? Money in the 60,000 US dollars. You guys are great. So you get another person in this case here for lack of knowledge will come and put these 60,000 US dollars there. And then this guy will call me immediately after the exam, how the paper has been good. How do you put goats and sheep together? This is US dollar. It cannot be, it has got really nothing, not compatible at all with what here with Kenya shillings, nothing. So these 60,000 should come on the leg of US dollars. So come and put 60,000 US dollars there, like that. And then now from there, your role this morning is to move across with these 60,000 across, 60,000 across. Up, what do we do? Up we divide. So 60,000 divided by this, please give me a figure to write. Up, divide. So give me a figure to write. Give me a figure to write. 58, triple 11. 58, triple 11. And of course, they're still what here? US dollars. They're still US dollars. And then we have across. Across, we have an exchange to do. Across, we have an exchange to do. So it is 103 Kenya shillings equals 1 US dollar. Equals 1 US dollar. So how about 58, triple 1 US dollars? Is there somebody who can do this cross multiplication for me? Is there somebody who can do this cross multiplication for me? 59, 85, 59, 85, 59, 85, 59, 85, 59, 85, 472, 472, 472, 472, 472, 472. So please ensure that you are a rich man. Any man who goes to trade in the stock exchange, any man who goes to invest in the stock exchange, ladies and gentlemen, does not use decimals. You must learn the art of saying keep change. You must learn the art of saying keep change. So how did we get this 58,111? Up, divide. We took 60,000 divided by 1.0325. Up, divide. That's how you cram it, Baba Akeyo. That's how we cram this. That's how we cram this. Up, up, always my home. So long as you're moving up, I don't want to really have so many things that I'm cramming. So long as I'm moving up, even if it's on this leg, so long as I'm moving up, I'll always do what here divide. Because you know, these are future value. Future value must be more. This is now present. So up always divide, down always multiply. So like now here we are moving downwards, free fall, this thing is falling down. We expect the speed to increase. So down you must multiply. So could you kindly take this times this? Take this times this. Please give me the downward figure. 61, 61, 80,000. 61, 80,000. 61, 80,000. So here we have 61, 80,000. 61, 80,000. 61, 80,000. 61, 80,000. Kenya who? Kenya shillings. Thank you very much. I'm told that this figure is not correct. I'm told it's supposed to be 5984, 5984, 33. Yeah, that's Mercy. 5983. Ladies and gentlemen, listen. You know, when we write this thing here, 4 decimal places, ensure that you're using 4 decimal places, just like us. Even if you got more decimal places, here now we have 4. So please, when you are going to your calculator, punch 60,000, you say divided by 1.0325. Don't use the big figure in the calculator. Don't use the big figure in the calculator. Take this, divide by this. Is this figure correct or wrong? It's very correct. Carol John, it's very correct. Is it correct? 6179, 6179, 960, 61, 61, 6179, 6179, 61. No. So please, I know where the issue is coming. The issue is coming because there are students who are picking this figure as they had it in the calculator. All right. So remember, as we're not dealing with the decimals, so we shall go back and retype this afresh without a decimal, and then I multiply with this. Here, there is nothing really like a shortcut there. Right? Right? 5985. 5985. $59.85, 433, 433. Avoid those decimals totally. Avoid the decimals totally. So pick this figure without a decimal, right? Pick it without a decimal. So I'm being told it's 433 there. All right. So then this one here will give us what figure? This one here will give us 6179, 6179, 960, 960 what here? Kenya shillings. 960 Kenya shillings. 960 Kenya shillings. Now, Mayomi is asking, I meant for foreign payment borrow local. Would one divide at borrow and multiply at investment? Mayomi, we don't want to cram this thing that way. So long as you have, if for example, it was to be the other one, maybe this 60,000 would have come here, US dollar. So what am I supposed to do? Up, divide, down, multiply. Up, divide, down, multiply. I don't want to go like this policy. Should I multiply up? That really will be too much for me. That will be too much for me. Actually, I sympathize with your brain. You want to overwork it for nothing, really. Right? How you'll put in this case here, for example, an engine of an Audi in a Toyota. Don't overthink. No. So long as I know where to place the figure, then up, divide, down, multiply. So from there, ladies and gentlemen, now I have my figures here. My figures here are here. This is the money market figure. So come and give us there a summary. So for Roman 3, give us a summary. So for Roman 3, come and give us a summary. Come and give us a summary for Roman 3. So come and give us a summary here. So give us a summary. A summary. So we have here forward contract. Forward contract. Then we have money market. Money market, the final figure for money market is 6179, 960 Kenya shillings. How about forward contract? Forward contract, you guys must be having a figure. Forward contract, you must be having a figure from Roman 1. From Roman 1. From Roman 1, you must be having a figure. It is 60,000. 60,000, 60,000, 60,000, 60,000, 60,000. So in this particular case, ladies and gentlemen, in this particular case, so now I'm in Roman 3 at the decision stage. So here we are making a decision. Here we are making a decision. So could you kindly go ahead and tell us which one in this case? Remember, this is a receivable. So if it's a receivable, the more the money receivable, the better for you. The more the money receivable, the better for you. So in this case here, we shall select money market has a higher amount. So money market is preferable. Money market is better. Money market is better. Money market is better. Money market is better. It's going to give us more. Baba Keyo, remember, it is the amount that we had here moving down, we are multiplying. So as Charity has told us there, thank you very much. Even Mary has explained. We took the figure that was up there, down multiply. Down multiply. Thank you very much. Thank you very much. Thank you very much. Thank you very much. November 2017, November 2017, November 2017, November 2017, November 2017. Question number 5B. Elizabeth Mukoma, that's a good question you've asked, but I'm so sure you came in late. I would expect you to do what here? To watch the video. I would expect you to watch the video. How did you get forward? I'm so sure you came in a bit late. You must have overslept a little bit. So please watch the video. Great. So is there someone who has been able to get this November 2017? November 2017, this question of Jackie Maribe. So Jackie's Limited is a company based in France. As a good examiner, I'm so sure the moment I tell these students that this particular company is based in a different country other than Kenya, I'm so sure I'll drop over 50% of them under the bus. If I tell them that this person is based in a different country other than what here, Kenya, straight away over 50% under the bus. And as an examiner, I would have achieved, because good examiner is to ensure that you go with few people to heaven, the other side. The road to heaven is very narrow. So Jackie's Limited is a company based in France where the euro is widely used. The company has recently imported raw materials from the USA and has been invoiced US dollars to 40,000 payable in 3 months' time. In addition, the company has exported finished goods to the USA and Australia. The customer in the USA has been invoiced for US dollars 69,000 payable in 3 months' time. And the Australian customer has been invoiced Australian dollar 395,000 payable in 4 months' time. The current spot and the forward exchange rates are given as follows. So you can see US dollar spot 3 months forward. Great stuff. The current money market interest rates have been given down there. And ladies and gentlemen, they want us to show how the company can hedge its foreign exchange exposure using forward market cover. Oh, do we still have these kind of good examiners out there? These are good examiners. I'll get, in this case here, all these marks without thinking at all, but unless I have a problem, really. I'll get all the marks here without thinking at all of them. I'll get all the marks here. So I'll write there in capital letters, forward contract, I underline, because they can't allow me to use a yellow highlighter. So forward contract, you underline. Ukishafanya namna hiyo, umeshtua examiner. Umeshtua examiner. Kumwina nilembeti kasi neba, waishtuliwi. Lakini hapo umeshtua. Sababu such a question, very many students will not even write any title. Such a question normally goes blank out there. So for forward contract, ladies and gentlemen, what do I need? I need the amount. So the amount, remember here, we have got 2 periods. We've got 2 periods. We've got 3 months. We've got 3 months, 3 months and 4 months. 3 months. So 3 months, I would want the amount here. I would want the amounts. I would want the amounts. So for 3 months, what have they told us? Jackie's Limited is a company based in France where the euro is widely used. The company has recently imported raw materials from the USA and has been invoiced 240,000, 3 months, 240,000 US dollars. Is this going to be a receivable or a payable? Is this going to be a receivable or a payable? Is this going to be a receivable or a payable? Aha, payable, receivable, payable, receivable. Ladies and gentlemen, remember here, we have imported raw material. When you import, what does it mean? The raw materials are coming to your country, you must pay for them. It's a payable, don't be confused. So this is a payable. It's an outflow, payable. Thank you very much. Still, in 3 months, do we have any other thing? Yes, look at paragraph number 2. In addition, the company has exported finished goods to the USA and Australia. The customer in the USA has been invoiced for US dollars, 69,000. I can see that is again payable in 3 months, but you have to be very careful. There is another amount of 69,000 in 3 months, but now remember, this one is not even if they want to cheat you, really, you are a clever person. You know for sure that these people this time around, they exported. So you export goods, what do? You receive. It's a receivable. It's a receivable. It's a receivable. Receivable. Of course, ladies and gentlemen, I'm quite aware that there is no sinner, or rather sin, that is bigger than any other. All these sins are the same. But ladies and gentlemen, for finance, there is a bigger sin. Like now here, we can see these amounts are falling on the same duration. When they are falling on the same duration, you must lump them together. You can't hedge them separately. If these are coming in 3 months, if you try hedging them separately, and I realize that as an examiner, straight away you get a 0 in that entire question. So here we need to do what our sister is telling us there, to net. It has to be net because they are of opposite directions. One is an outflow, the other one is an inflow. Otherwise, if, for example, both of them were payable or both of them were receivable, would have added. But you have to subtract really. So in this case here, the net amount will be minus 240,000 plus 69,000 minus because of the outflow. Because of the outflow. So could you kindly give me the net figure here? 171,000 US dollar. So it's a negative like that. I know that the net amount is a payable of 171,000 US dollar. Is a payable. It's a payable. The net is a payable amount. The net is a payable amount. So if it's a payable amount, could you kindly go ahead and give me the roll of the bank? Go ahead and give me the roll of the bank. So I'll write here roll of the bank. Roll of the bank. So the roll of the bank will be to do what here? To sell. The roll of the bank will be to sell. I'll write there at, but I'll leave it like that. The roll of the bank will be to sell. From there, ladies and gentlemen, could you kindly go ahead and give me, please go ahead and give me the 3 months exchange rate. Is there anybody who is able to see the 3 months exchange rate? Is there anybody who is able to see the 3 months exchange rate? Is there anybody who is able to see the 3 months exchange rate? Is there anybody who is able to see the 3 months exchange rate? 3 months exchange rate. 3 months exchange rate. The 3 months exchange rate. Is there anybody who is able to see the 3 months exchange rate? Ah, yes, 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 yes. So we have there the 3 months exchange rate is 0.9520 to 0.9525. But for whatever reason, my dear Betty there is writing per Kenya shilling. Per Kenya shilling. Where has she gotten per Kenya shilling? I thought we don't have Kenya in this question. Could you kindly write this expression nicely? Could you kindly write this expression nicely? It's supposed to be what to what here, somebody? It is US dollar per euro. Thank you very much. US dollar per euro. So US dollar per euro. Could you kindly shake your hand and tell me which one is the buying rate? Kindly shake your hand and tell me which one is the buying rate. Shake your hand and tell me which one is the buying rate. Which one is your country? Your country is in France, which makes use of what here? The euro. So many students after this exam, they called me. They told me, Mwalimu, for sure you taught us this thing of money market and forward contract very well. But when we went to the exam, we were not able to know the direction to shake our hands to. Then I asked them why. And because I could not see Kenya shillings. So he just went, instead of now shaking to what, so I was just stuck there at the middle, not knowing whether to shake the other side or it is euro. Euro is your home country. Euro is your home currency. It is on the other side. It is on the other side. So this becomes buy, and then this other one here becomes automatically what here? Sell. So ladies and gentlemen, if that is the case, then I know I've said here that the bank is going to sell. So the bank is going to sell. The bank is going to sell at 0.9520. 0.9520 US dollar per what here? Somebody per euro. US dollar per euro. So ladies and gentlemen, could you kindly advise me, what do you think would be the next thing to be done, having done this kind of a good job? What do you think would be actually the last thing to do now? We convert, isn't it? So again, you'll get, for whatever reason, I've never understood, you'll get a student reaches here very nicely, and then you get this person from nowhere just drawing a table out of nowhere. I don't know what normally happens with students. I don't know whether, and that is why we need to keep on binding the devil, right? Right? Because you are almost, in this case, ladies and gentlemen, reaching home. And now here we have your pot breaking down, right? So the moment I've been able to get the amount, I've been able to get the exchange rate. The next thing, ladies and gentlemen, will be to do what here? The next thing, ladies and gentlemen, there will be to exchange, to convert. You convert. So you go ahead and convert for us. You go ahead and convert for us. There's a shortcut to conversion, but again, don't overload your head. This head of yours has got so many things. So please go ahead and convert. And we are saying here the rate. You guys give me a rate here, the selling rate. It is 0.9520 US dollar equals 1 euro. How about 171,000 US dollar? US dollar. How about that? It will be 171,000 US dollar times 1 euro all over 0.9520 US dollars. So the US dollars will cancel out, leaving me with how many euros? Leaving me with how many euros? Leaving me with how many euros? Mwalimu, you said at right side of current. Mayom, I've not understood your question. Right side of current. You see the euro. The euro is right? And if it is on the right, so the right figure becomes what here? The buying rate. Unless I'm not getting your question very well. Mayom. So then they're giving me a figure of 179,622. 179,622. 179. 622. Cows. Are they cows? Euros. Are they cows? Euros. Thank you very much. Thank you very much. Let me try to understand my own question here. At the right side of currency is foreign, and the left is home currency. Is that what we say really? The home currency, look at this question. Jackie's Limited Company is based in France, where the euro is widely used. So euro is your home currency, right? And then when you look at how they have expressed this exchange rate, it is the US dollar up there, it's given. It is the US dollar per what here, somebody? Per euro. So I don't know, maybe Mayom got me wrongly. Maybe Mayom thought that always the home currency must be on the left. No. These things keep on changing. It depends how the examiner is expressing the exchange rate. Like this time round, the euro, which is the home currency, is on the right side. So I have to shake on the right side. There is nothing that is fixed on stone here, my own. All right, ladies and gentlemen, after that, still on 3 months, I'll not go to 4 months. On 3 months, I'll straight away go and give this examiner the money market thing. So I'll come here and now write the money market. My work now is very simplified. Money market dash 3 months. Money market dash 3 months. Right? Remember the amount, which happens to be net, is 171,000 payable. So which rule am I going to use? 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 Ah, great. It is FP. So the rule applicable here is FP, BL, and of course, in this case here, the bank sells. The bank sells. The bank sells. I can even go ahead and give them the bank selling rate. So go ahead and give us the spot. So is there somebody who is able to see the spot rate? Is there somebody who is able to see the spot rate between the US dollar and the euro? The spot rate, yes, the one there for 3 months. I can see the spot rate up there. The spot rate is 0.98, 0.9830, all the way to 0.9850, like that. So of course, these are US dollar per what here, somebody per euro. So again, shake your hand nicely. Shake your hand nicely. Shake your hand nicely. Euro is on the other side. Euro is on the other side. So if it's on the other side, it means straight away that this is the home currency, right? So this becomes buy and this becomes sell. So I'm able to tell you that the bank will sell at 0.9830 US dollar per euro. Unfortunately, so many students also tend to forget that for money markets, we always use the spot exchange rate. We always use the spot exchange rate. Leave it like that. Go ahead and draw your table. Go ahead and draw your table. So now here we are drawing our table. Go ahead and draw your table. Go ahead and draw your table. So our table is like this. So we have here borrow, we have here invest. So which currency are we going to borrow? Which currency are we going to borrow? Which currency shall we borrow? USD. Thank you very much, ladies and gentlemen. Remember here we are borrowing local. Look at this. Borrow local. You are borrowing the local currency. You are borrowing the local currency, and then now you invest here the foreign. So you're borrowing the local. The local currency is the euro. The local currency is the euro. When I say my local is USD, Betty, how can you tell me that local is USD really? And we said, you know, you have to reason like now you are in France. The company is based in France, which uses what? Yeah, the euro. I can't really understand this. It's based in France. So you're making use of what? Yeah, somebody, the euro. We are making use of the euro. Now, could you kindly then go ahead and tell me, of course, the other one will be the US dollar. Invest the US dollar. Could you go ahead and give me the borrowing rate of the euro? Borrowing rate in France. Is there somebody who is able to see the borrowing rate in France? There's a table they have given us there for rates. Is there anybody who is able to see the borrowing rate in France? Borrowing rate in France. So I'll talk of 13%. So 13% times 3 over 12 because it's 3 months. Plus 1. Plus 1. Could you kindly give me this figure? So 1.0325. 1.0325. How about investing in the US? Investing in the US, is there somebody who is able to give me this investing in the US? Investing is the same as lending. You're lending money to the bank. So investing in the USA, somebody is telling me it is 10%. So I'll talk of 10% times 3 over 12 plus 1. plus 1, which gives me 1.025. And then in between here, we have convert at 0.9830 US dollar per euro, like that. It's after doing all these good things that you shall come and bring the money in the question underneath the table. So the money in the question, is there anybody who is able to remember the money in the question? Is there anybody who is able to remember the money in the question? Anybody who is able to remember the money in the question? The money in the question, 171,000 US dollar. Where do we put this 171,000 US dollar? Where do we put it? In which leg? This leg or the other leg? This leg or the other leg? This leg or the other leg? Or on the right, or the US dollar here. So we have here 171,000 US dollar. Thank you very much. And then now, ladies and gentlemen, up. What do we do up? Up. We divide. Up divide. So 171,000 divided by this figure will give me how much? 171,000 divided by this figure will give me how much, ladies and gentlemen? 1668, 1668.29 US dollars. Across, there is an exchange rate. Across, there is an exchange rate. So now I'm trying to exchange here across. While exchanging, I know 0.9830 US dollar equals 1 euro. How about 1668.29 US dollar? This one here will be equal to what? This times this divided by this. This times this divided by this. I don't want your decimals. I don't want your decimals. I don't want your decimals. 1697.14 euro. And then down, ladies and gentlemen, what do we do downwards? Downwards, what do we do? Downwards, what do we do? We multiply. Downwards, we are multiplying. Downwards, we are multiplying. Downwards, we are multiplying. Take this figure times this figure. Give me something here. Give me something here. Give me something here. Thank you very much, Stephen. Down, we are always multiplying. Even if I understand nothing out of this room, I know that down, we shall always multiply. Where somebody called Mary is giving me 175, 230, 175, 230. Remember, these are euros. Euros, we write euro like that. They're euros. So this is the money market thing. I saw a good student really who knows how to make their work quite beautiful. This student was highlighting this yellow, the final figure for money market. The final figure for money market. I like how Caroline John is dancing. Thank you very much, ladies and gentlemen. Have a beautiful day. Bye-bye. 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 I hope they've been able to write up to here. And now I can turn down my machines, everything.